the most popular question I get is, hey, how's the market, Tom? What's going on there? So here's our slide. We always begin with a slide. This chart depicts the average price for a home on the Toronto Real Estate Board. And our story starts in 2017, where you can see to the far left, we saw prices go up 20, 30% in a matter of few months. It was just an incredible market as far as bidding wars and record sales. So alarming that the government intervened in April of that year and announced something called the Fair Housing Plan, which included provisions such as a foreign buyer tax. The moment that was announced, you can see that it had a huge effect because essentially it took the wind out of the sails of the market and it went down just as fast as it went up. You'll see for a couple of years, steady increases the way the market's supposed to behave. And then this big green circle is basically COVID-19. You'll see the beginning of the pandemic that there was a drop in price. And that was because that was the first lockdown in March of 2020, where buyers got a little scared, removed themselves from the market, and kind of took a wait and see approach. But it was short-lived. Once the economy started to open up and people felt more comfortable with what was transpiring, you'll see that the prices rebounded fairly quickly. Sure enough, then it was about January 1st, as if everyone decided to make a New Year's resolution, I want to buy a new property. And you'll see this spike in prices, this surge that occurred here, followed by a bit of a trailing off. We'll talk about what's been happening lately. So this chart here depicts, it basically compares, I should say, June of 2021 and compares it with June of 2020. You're going to see a few stats that are going to jump out at you. First, the number of sales. So you'll see that in June of 2020, we sold collectively 8,600 homes. In June of 2021, that number has gone up to 11,100 homes for an increase of 28.5%. So picture that, guys. That is what we call demand. That is a lot more buyers than there were a year ago. And sure enough, our supply, though, dropped by 19%. So 14,000 homes last year for sale. Now it's about 11,300 homes for sale. Again, economics 101. When you have a lot more demand and not as much supply, that causes your prices to go up. You'll see here 17% from last year. That is incredible. A typical market, long-term average, about 5 to 7%. This is 17% from last year. And that's because of the dynamic between supply and demand, as you can see. Now, some people have been noticing, they've been reading the paper saying, is the market cooling off? Are we seeing some signs of, cooling off or prices going down? Going back to this chart here, you'll see that it's starting to level off, the prices. And it makes a lot of sense because when you have prices go up this fast, it cannot continue like this. People kind of get used to this and think it's abnormal when the market decides to take a rest. But sure enough, we are seeing signs of cooling down. The question I get is, how competitive is the market and do bidding wars still exist? Well, to put in perspective, for those of you that love numbers, we have about 1 month of inventory on the market remaining. What that means is that if we did not put any more homes for sale in the market, we would run out of homes in about a month. So that is what we call a seller's market. A normal market is between 3 and 5 months, but in this case, we have basically not a lot of supply still today. And you'll see here in comparison to our 10-year average of 2.1 months. So we're still in a seller's market. There's also an interesting point here that was raised from one of our research papers that was describing that the average sale price in June was 1,000,009, as you can see there, with an increase of 17%, like I discussed. But the year-over-year change has remained pretty unchanged. Month-over-month growth has remained pretty much unchanged for the last 4 months, and you saw that here in this chart. So you can kind of see here, it's kind of just steady. But the market will still remain competitive as homes continue selling above their asking prices. Believe it or not, they're selling above on average about 105%. All right, now what we are seeing is that the demand is shifting away from freeholds to condos due to affordability and buyer fatigue. And the reason being is the difference in price between the average detached and the average condo is about 724,000. So when you have this big difference between the two types of properties, you're going to see people basically say, I can't afford your $1 million detached home. I need to buy something much more affordable. Sure enough, the stress test was also incorporated in June. We have not seen the full effects of the stress test yet, just because it's more going to be more of a lagging. We'll see what happens next 3 months with that. And one trend that has occurred too was with condos. Back in the fall, they were struggling to sell. There was a lot of supply out there. Sure enough, for the reasons I mentioned, they've become much more affordable. We're starting to see that we're getting bidding wars for condos. We're starting to see that there is less inventory out there. So again, condos have reemerged. The most popular question I get from buyers is, will the market crash? Everyone wants to get the best deal possible, right? Our long-term fundamentals suggest that whatever you buy today will be worth more in 5 years from now. So in the short run, it's hard to determine what exactly will happen, up, down, sideways. But I personally fundamentally believe that if you buy anything today, that in the long run, it'll be worth more money. And that is what, in essence, real estate is. It is a long-term play.